Ready to amplify your trading game, but feeling overwhelmed by margin trading on Kraken? This tutorial will demystify the process, giving you the knowledge to confidently navigate leveraged positions. First, you'll need a Kraken account. If you don't have one, follow the link in the description to sign up. Once you're logged in, enable margin trading by navigating to your account settings and completing the necessary verification steps. Margin trading involves borrowing funds, so Kraken needs to assess your eligibility. Next, let's understand margin requirements. This is the amount of your own capital needed to open a leveraged position. Different trading pairs have varying margin requirements, typically expressed as a percentage. Now, let's open a margin position. Select your desired trading pair, like BTC, USD, or ETH, EUR, and choose the margin trading option. Specify the amount you want to trade and your desired leverage. Be cautious. Higher leverage magnifies both profits and losses. Before confirming, carefully review the order details, including the margin required and the potential liquidation price. The price at which your position will be automatically closed to prevent further losses. Once the order is executed, monitor your position closely. Use stop-loss orders to limit potential losses and take profit orders to automatically close your position when your target price is reached. Finally, remember that risk management is paramount. Start with small positions, use appropriate stop-loss orders, and never risk more than you can afford to lose. Margin trading can be powerful, but it requires careful planning and execution.